There's a particular kind of Sunday a lot of business owners know too well. The work for the week is done, the customers are handled, and there's one thing still sitting on the desk that you've been walking past for days: the books. The pile of receipts, the transactions you haven't looked at, the bank account you're a little afraid to open because you're not sure what it's going to say. And every time you finally sit down to deal with it, it somehow feels bigger than it did the last time. One owner, doing her own books for a tiny business where every dollar counts, described it about as honestly as it gets. She said it was draining her, categorizing transactions, reconciling the bank, trying to make sure she hadn't messed up the taxes, and then the quiet question sitting underneath all of it: is it just me struggling with this? It is not just her, and it is not because she's bad at this. The reason bookkeeping feels so heavy is almost never that it's complicated. It's that it never stops. There's always another week of transactions waiting, and it's the easiest thing in the world to push to later. An owner who'd been through it summed the whole fix up in one line: the hardest part is consistency, not complexity, and it gets easier the moment you stop trying to stay perfectly caught up every single day. So that's what this is really about. Not turning you into an accountant. Just turning the books into a short routine you can actually keep somewhere around half an hour a week. Once it becomes a habit, the dread starts to lift because you finally understand what your own numbers are telling you. This is also about the skill itself, the part that stays useful no matter which app or spreadsheet you land on later, not a button-by-button tour of one piece of software. We'll go through what bookkeeping actually is, in plain words, the small handful of things that truly matter, and the simple weekly rhythm that keeps it from piling up. Then, the 5 mistakes that quietly cost small business owners thousands. And finally, the point where it makes sense to bring in a tool or a person to take some of the load off your plate. If it helps to know, you're in very good company. Most small business owners actually do their own books, at least starting out. And plenty are running the exact same way you might be right now, with no real accounting software at all, on spreadsheets, on paper, on a folder they open once a year and dread the entire time. And the ones doing it by hand are pouring real hours into it, often the better part of a full workday every month, gone to data entry and second guessing. But the hours aren't even the heaviest part. The heaviest part is the weight of it, and that weight is right there in the way people describe their own books. One owner said the thing that finally got to her wasn't the difficulty at all. It was the relentlessness, having to do the books every single month and just not feeling disciplined enough to stay on top of them. Another said something that should stop any of us in our tracks: he did his books by hand, by himself, for too long, and he grew to hate the business before he finally switched. He grew to hate the business he built. That's what bad bookkeeping habits really cost, long before any tax penalty ever shows up. And then there's the fear, which almost nobody says out loud. The quiet worry that you're going to get something wrong and it's going to come back to bite you. If you feel that, it's worth knowing how normal it is, because it does not go away with experience. There's a thread where a bookkeeper at an accounting firm, someone doing this for a living, forgot to submit a client's payroll one morning. The post was raw. "I feel so dumb," it said. "Am I even cut out for this?" And dozens of other accountants showed up underneath to say the same thing happens to all of them, that the heart-sinking feeling is universal, and that there is always a fix. Nobody is born knowing this. The dread you feel sitting down to your books is not a sign you're bad at it. It's the most normal part of the whole thing. And if you're not just behind on the system, but behind on the actual work, months of receipts, a whole year you never sorted, maybe more, that isn't a sign you failed either. It's one of the most common places people start from. You haven't missed some window. You just start from where you are, and everything that follows works exactly the same. So that fear is worth taking down a few notches, and it starts with getting clear on what bookkeeping even is, because the word makes it sound bigger than it is. Start with the simplest distinction. Bookkeeping and accounting are not the same job. Bookkeeping is just recording what happened. Money came in, money went out, here's where it went. Accounting is the interpretation that sits on top of that, the tax strategy, and the deeper analysis, and that's the part you can lean on a professional for. So, when you're doing your own books, you are not trying to become an accountant. You're keeping a clean, honest record. That's a much smaller and much more doable job, and it's worth saying plainly because the bar in your head is probably set far too high. The whole thing rests on one rule, and if you take only one idea from this video, make it this one. Keep your business money and your personal money completely separate. A dedicated business checking account, a dedicated business card, and every dollar for the business runs through them. Bookkeepers actually have a name for breaking this rule. They call it the cardinal sin of bookkeeping because mixing the two is exactly what turns a 30-minute task into a lost afternoon of untangling. When your business has its own accounts, your bookkeeping is already half done because the record more or less builds itself. If you already covered some startup costs out of your own pocket before the business account even existed, that's completely normal. Almost everyone does it. You just record those as business expenses you happen to pay personally and carry on. The rule is about how you run things from here, not about punishing what already happened. From there, two words you'll keep running into, both gentler than they sound. The first is categorizing. All that means is sorting each transaction into a bucket. This one was supplies, this was software, this was a client payment. One owner described the whole idea of a chart of accounts as basically just your buckets of money and debt, which is exactly right. And for most service businesses, the real skill here isn't precision, it's restraint. A few broad buckets will usually serve you better than 100 hyper-specific ones. If you carry inventory or you handle sales tax across a few states, you'll want a little more detail there. But for most owners starting out, simpler is genuinely better. And if you're looking at a blank list wondering what your buckets should even be, owners who've done this swear by one shortcut. Pull up the IRS Schedule C, the form your business income lands on at tax time, and use its expense lines as your starting categories. Your books then line up with your taxes from the very first month, so when tax season comes, there's nothing to translate or untangle. The second word is reconciling, and it's the one that sounds intimidating for no good reason. Reconciling just means that once a month, you check your own records against what the bank actually says, line by line, and make sure the two match. That's the whole thing. It's the step that catches the duplicate charge, the fee you didn't notice, the payment that never landed. It's how the books catch their own mistakes. Skipping it is how owners end up trusting numbers that quietly drifted away from reality months ago. And the reason any of this matters, the thing sitting underneath all the buckets and the reconciling, is genuinely simple. It's so you can answer the only questions that actually run a business. Did I make money this month? Where is it going? What are my real margins? One owner stripped it down to exactly that and said, that's literally it. That's all I want to know. Here's where almost everyone gets caught, though. The balance in your bank account is not the answer to those questions. Some of that money is tax you owe. Some of it is bills that haven't hit yet. Good books are just the difference between guessing at your numbers and actually knowing them. Now, here's where that idea about consistency turns into something you can actually hold in your hands. The answer to a task that never stops is to make it small and regular instead of huge and rare. It really comes down to about 5 moves, and together, they're the whole cycle, start to finish, not just disconnected pieces. The first is the foundation, and you set it once. Open that separate business account and card and route everything through them. You do this part a single time, and it pays you back every week after. Next, you let the record build itself as you go. Connect your bank so transactions flow in on their own, and then pick one place for receipts. A folder, an app, even a literal shoebox, it honestly doesn't matter. What matters is that it's one place and that you drop things there the moment they happen instead of hunting them down in a panic next spring. For paper receipts, a quick photo on your phone counts as your record. So snap it the moment one lands in your hand and let the paper go. Hold on to those records for about 3 to 7 years because if the IRS ever has a question, the receipt is what answers it. The third move is the heart of all of it. A short weekly block, 20, maybe 30 minutes, once a week, where you sit down and sort that week's transactions into their buckets. One owner who'd cracked this said it better than any textbook. Do the books every couple of days, and it takes 10 minutes instead of hours. Small and frequent beats big and dreaded, because when there are only a handful of transactions in front of you, you still remember what they actually were, and you make far fewer mistakes. There's one mix-up worth heading off right here, because it trips up almost every beginner, and it's credit cards. When you buy something on the business card, that purchase is the expense, counted the day you bought it. Later, when you pay the card off from your checking account, that payment is not a second expense. It's just moving money to cover what you already counted. So record it as a payment on the card, not as a brand new cost, or everything ends up counted twice and your numbers look far worse than they really are. Once a month, you reconcile. You sit down with the statement, match it against your records, and fix the few things that don't line up. On a clean month, with a separate account already doing the heavy work, this is quick. And the last move is to put your tax money somewhere you can't casually spend it, and then take 2 honest minutes to read your numbers. Profit, where it went, your margins. That's the entire loop. Set it up once, give it half an hour a week, reconcile once a month. That is not a talent you have to develop. It's a routine you can keep, and keeping it is the whole game. And starting from behind doesn't change the routine. It just changes where you begin. You start at whatever week you're actually in, so the pile stops growing tonight. The backlog you handle separately, a little at a time, or you hand that one cleanup to a bookkeeper while you keep the cheaper going forward part yourself. The point is to stop the pile from growing first. Catching up comes after that. Once you've got the routine, almost all the trouble that lands on small business owners comes down to 5 specific mistakes. And these are worth walking through honestly, because every single one of them is something good, capable owners do. Usually because it felt faster at the time, or because nobody ever told them otherwise. So if you recognize yourself in a few of these, you're not behind, you're just about to fix them. The first one we already named: mixing personal and business money. It feels harmless early on. You grab the business card for groceries one time, you pay yourself by just pulling cash out. But to a bookkeeper, that's hours of untangling. And to an auditor, it's a flashing red flag. One bookkeeper described the worst version of it: clients who pull money out and label it a business expense, and then someone has to spend hours separating what was actually real. The fix is the separate account. Every time, no exceptions. The second is the one that turns a small job into a genuine nightmare: doing it once a year instead of a little at a time. This is the shoebox of receipts approach, and it tends to end the same way for everyone. There's an owner who found her accountant 2 months before taxes were due and discovered she had 7 months of reconciliation waiting for her. And she called it exactly what it was: a nightmare. And it costs real money on top of the stress, because a bookkeeper will charge you to clean up every single month you let pile up. The weekly block is the thing that saves you from this entirely. The third is skipping reconciliation altogether. It feels optional. The numbers look about right, so why bother checking them against the bank? But skipping that check is exactly how the quiet problems pile up. A fee you'd never have approved, a payment that silently failed, even outright fraud. All of it sitting in your books for months with nobody there to catch it. Matching to the statement once a month is cheap insurance against numbers that have started to lie to you. The fourth one catches the conscientious people because it's the opposite of what you'd expect. Over-complicating it, owners think good bookkeeping means tracking everything in obsessive detail, so they build 100 tiny categories nobody can use. One bookkeeper's biggest pet peeve says it all: 1,000 line items that just say Amazon and a report you can't actually read. For most owners, less really is more here, with that same caveat for inventory and sales tax. A handful of clear buckets will tell you more about your business than a sprawling mess ever could. And the fifth is the quietest and the most dangerous: treating the money in your bank account as your profit. We already said the balance isn't really all yours, but it's sitting right there, so it's the easiest trap in the world to fall into. One bookkeeper put it plainly. They deal with too many owners who look at the bank balance and honestly believe they have more money than they do. That's how a strong month turns into a nasty surprise at tax time. The fix is that separate tax bucket and reading your real numbers instead of the balance. Now, everything we've just covered, you can genuinely do yourself by hand with a spreadsheet and a routine for a simple business that's not a compromise at all. It's genuinely the right answer. If you've got one bank account, a manageable number of expenses, no inventory, and no payroll, you do not need to spend a dollar on software to do this well. But there's a real point where doing it by hand starts costing you more than it saves. And owners describe that line pretty consistently. One put it well, once you need invoices going out, or payroll, or sales tax, or you start paying freelancers and contractors, or more than one person touching the books, that's usually the moment software or a bookkeeper actually becomes cheaper than your own time. That's the real signal, not your revenue, not what some app's ad tells you. It's the moment the manual version starts eating time you should be spending on the business itself. When you reach that point, accounting software just automates the same loop we talked about. Tools like QuickBooks, Xero, or a free starting option like Wave will pull your transactions straight in from the bank and help you sort them automatically. There's no need to compare them here. There's a full QuickBooks versus Xero breakdown that walks the exact choice in plain English, and it's linked in the description. The short version is that any of them handles the basics just fine. There's also a newer option worth being honest about because it's 2026 and it genuinely exists now. A general AI assistant, the kind that runs around $20 a month, has quietly become a real help with this. Owners are using ChatGPT and Gemini as a patient tutor to learn their software, asking the dumb questions out loud without feeling judged for it. A bookkeeping firm described using AI to speed up the grunt work of categorizing while always pairing it with human eyes. And the more technical owners are even wiring it to their bank to draft reconciliations, though that's a real setup project, not something you do in a chat window. But the limits are real, and the people actually doing this are the first to say so. One owner used Gemini as a tutor for a whole year and still chose to hire a bookkeeper purely for the time it gave back. People get nervous, understandably, the second AI touches their actual bank account. And the one rule everyone who uses it repeats is the same. You check the work before you trust it. So treat it as a genuinely useful assistant for learning and for the tedious parts, not as a replacement for understanding your own numbers, and not as a stand-in for a human when the stakes are real. And if any of this is starting to feel like one more overwhelming thing to set up, hold on to this single idea. No tool fixes bookkeeping. A tool only speeds up a routine you're already running. The cheapest and most powerful move you can make isn't buying software. It's deciding the books matter and giving them that half hour a week. The software is just a faster version of the habit. The habit is the real thing. So if you take nothing else from all of this, take the next 3 steps because they're small and they genuinely change everything. First, if your business money is still mixed in with your personal money in any way at all, open a dedicated business account and card this week. Not someday, this week. It's the single most important thing on this entire list. Second, before next week slips away from you, put a recurring 30-minute block on your calendar and label it simply the books. Treat it like a standing meeting with the most important client you have, because in a real way, it is. Third, pick your capture habit and start it today. Connect the bank feed, choose your one spot for receipts, and let the record start building itself. And when it starts to feel like a lot, remember this. You didn't start your business to become a bookkeeper, and you don't have to become one. You just have to keep an honest record, half an hour at a time. Do that, and the business you worked this hard to build is one you actually understand instead of one you're a little afraid to look at. That isn't busy work. That's you staying in control of your own thing. If you're already past the spreadsheet stage and trying to decide on actual software, that QuickBooks versus Xero breakdown walks the exact decision in plain English. It's the natural next step from here. So subscribe and it'll find you. And before you go, leave a comment with the part of bookkeeping that trips you up the most. Is it the categorizing, the reconciling, or just finding the time? Every one of those gets read, and it's honestly what decides which video gets made next.